I am going to post this up and get started. Matt, how's it going by you?
Pretty good, actually. Getting ready to move across town, so I've been doing a lot of planning for that. And then, of course, didn't do any trades today. Coincidentally, I missed this entire craziness by luck. I had a lot of stuff come up, and I had to kind of bail out about an hour into market open. So, thank God I don't have a beat down to talk about. So
Got you.
that
So,
was pretty good. How are you guys doing?
so your new place is coming along good?
Yeah, not this Wednesday or next Wednesday. So that's the move date, 24th.
Nice. I'll try to come visit you in January.
Oh heck yeah, yeah, nice.
I'll let
That'd
you,
be awesome, man.
yeah, I'll let you know. Okay, all right. We got a couple of our speakers up in here. I just put out the tweet. I know that this other space that's going on right now with Stock Talk Weekly, they are closing that in just a second because he's going to be co-hosting this. So I'm sure when they come over, we'll get a nice bump of people. Hope everyone's having a good day. Shout out to everybody who caught our NFT space earlier. We had almost 1,000 people plus Trust Wallet, verified account with 1.3 million followers, was on that space. Really, really cool stuff. Um, with that being said, oh, and as everyone sees, this one is recording. They gave me the record option, so I'm trying it out. And I also had a meeting with Twitter Spaces today to talk over some more stuff that they're working on. But I would love to get started pretty much now because I don't want to waste anybody's time. And we said we were going to start at 5, so those other guys will hop in a couple of minutes. But let's get rolling with it. So off the bat, Danny, I would love to have you start, and obviously we'll come back to you again once there's more people in here. But walk us through kind of, coming out of that last space that we did with market psychology, maybe some of your, takeaways and overall arcing ideas, and then going into, a little bit of discussion of why this is so important in today's environment.
Yeah, first off, thank you for doing this second market psychology space. I think it's really, really important. I can't stress how important the market psychology aspect of trading is, even relative to the technical and the fundamental side. I feel like the technical and the fundamental side is like anything else. It's a learning process. But when it comes to emotions and when it comes to psychology, um, man, this market really messes with your head. And if you're not prepared for it, it could really destroy not only your trading capital, but your mental capital. And, when we were talking the last time, I think there was a lot of good information that was going around. And I hope that anybody who was in the space last time that is here again, that might be a space. There is a recording. Wolf has that up on YouTube. That might be a space to listen to a couple of times. Like for me, trading in the zone, right? That's my trading Bible. That's my trading psychology Bible. I don't read it once or listen to it once and then put it away. I read it every quarter. And if I have a couple of bad days or, just do bad things, break my rules, I go right back to it. And so, the important thing is to have a habit, to build a habit. Because when you build that habit, and whether that's a trading habit, whether that's a daily habit, whatever it is, you have to consistently do it and build up that habit. And from a psychological standpoint, and again, I'm not a clinical psychologist. I don't have a degree in psychology, but I understand human emotions, and I understand how human emotions uh, hinder us when it comes to trading. It is so important to be able to, just put your emotions away when you're trading. If you're trading emotionally, then you're bound to lose money. It doesn't matter how good of a technical trader you are, you're just asking for trouble. And so I always say to anybody that I work with, and today's a really great example, and I'll talk about that in a minute. But I always say, if you had a bad day, if you had an argument with a friend or a spouse, if you wake up late, if you slept bad, if you had a headache, don't trade, because any outside influences in terms of your psyche is going to affect the way you trade. Even though you feel like it may not, trust me, it will. The mind is very, very powerful. And when it comes to trading, man, those things come out, those childhood traumas, the issues that we've had in the past, insecurity, anything. All of these things will come out. They will. Trust me. And I'm sure we've all felt them at one point or another. So, why I was saying that it's important to talk about these things, because look at what happened in the market today. You know, not for nothing, on the Tuesday space, we were talking about the market options expiration or the monthly options expiration on Friday. We did say that the market was going to be choppy all week. And these are the weeks that I always say preserve your capital, but preserve your mental capital. Don't sit in front of the screen. Don't stare at it and look for trades to take, because in this type of market volatility, you're just bound to lose money. I mean, if you're an experienced scalper or day trader, yeah, trade it. It's okay, but scale down and preserve that mental capital. So yeah, like for today, I woke up my normal. I wake up at like 4:30 Eastern before the market. I'm doing my routine. I have my coffee. I meditate. I just relax for a little bit, and then I jump into my routine. I jump into my habits, and then I go through my process. And by the time the market is like 30 minutes to open, I'm pretty much set and I'm ready to go. I'm relaxed. I might sit in silence for like 10 minutes, and then the market comes on. I have my 6 to 8 trade plans. I took my couple of trades this morning, and by 10:30, 11 o'clock, I was done. I have not even looked at the market since then. I don't even know where SPY closed because I don't care. I was in and out of my trades in the morning because I knew for me this week, all I'm going to do is day trade. And that's it. After that, I'm not holding anything overnight. I'm not looking to swing. Next week, we have Thanksgiving. So off on Friday, half day, excuse me, off on Thursday, half day Friday. I'm preserving my mental capital this week for when the market is good. Because the most important thing to understand about trading is you don't want to trade when the market is hard. You don't want to trade when the market is choppy. You want to trade when it's easier. And notice how I said easier, not easy, because it's definitely not easy. But in preserving your mental capital and your trading capital during these times, it's going to help you in the long run, preserve that mental capital and preserve your funds so that when the market is easier, you're able to just jump into those trades, you treat it mechanically, and you get out. So I was a little bit of a long-winded opening answer, but hopefully everybody understood what I'm trying to say.
Great opening start. And just one quick follow-up question, and then I'm going to go to my awesome co-host. So for Danny, you talk about your morning routine in just like 30 seconds to a minute. Why do you find it important to have a morning routine like that?
It's like anything else. I was actually reading something today. It was an Olympian marathoner that posted holding up a book of Atomic Habits, right? And so that I talk about that book. I posted about that book. I probably talk about that book every day. It is so important from anything you do in life to have a routine and to build habits. Because if you don't, it's like trying. I don't know how we used to navigate prior to GPS, right? How the hell did we get anywhere? We pull out that regular map, right? But regardless, you had a map, you had a guide. And for me, having a habit of a routine every morning gives me the focus that I need. Otherwise, I'm going to be scrambling. What do I do first? Do I build a watch list? Do I do my charting? Do I listen to the news? Do I do this? Do I do that? I mean, I don't want to have to think about what I do when I wake up. I want to have my routine. I go through my routine. And when the market opens, I'm mechanical. I'm emotionalist. I do what I got to do. I extract the money from the market that I want, and then I move on. So the only way I'm able to do that efficiently, like a robot, like an emotionalist trading robot, is to have a habit of a routine.
Definitely makes sense to me. Creature of habit, as they say. Awesome. Danny, thank you so much for starting us off with that. All right, very excited to be hosting another space with Stock Talk Weekly. Great to have you up here. Would love to hear from you if off the bat there's any, first off, how do you get your market psychology right? And what is standing out to you? And anything, that we perhaps didn't cover in the last space. And then we'll take it from there, hit on all the speakers, and then I have a couple topics I want us to go into.
Yeah, Wolf, you called on me, right? Just making sure.
Yes, sir.
Okay. Just want to be, I didn't want to interrupt. Yeah, for me, this is kind of, I would say, a complicated thing to apply market psychology, but also quite a simple thing to understand, right? Like everybody who's not trading, with an algorithmic computer software, which some funds are, but if you're trading as an independent decision maker, you're a human being and you have emotions and you have greed and fear and, desire and bias and all of these things lining up to interfere with your ability to be objective as a decision maker. And, the reason we talk about psychology and the reason we wanted to do another one of these spaces is I know traders who are very good technical analysts, who are very good fundamental analysts, but they're bad traders. And the reason for that is not because of their lack of knowledge. You know, for years, for decades, I would say the financial industry and the financial services industry have done a really good job of making trading and investing seem esoteric. And it's kind of ironic that I would use that word to describe that, but that just means a privileged class of information that only certain people should know about, right? Like all the abbreviations you hear about, whether it's in technicals with VWAP and RSI and MACD and SMAs and EMAs, or whether it's on the financial side, with EBITDA and all of these abbreviations that people use are intended to make things seem hard to learn or hard to understand to the retail, investing and trading base. The reality is learning fundamental analysis and learning technical analysis is not difficult. It's actually quite approachable for most people if you take the time and put in the work. What is difficult is pairing your knowledge and your education on all of these topics with a strategy that allows you to be objective. And, some people approach this the wrong way. They come into the market and they go, I know my psychology is going to get in the way. So the solution for me is to change my psychology. No, that's not the solution. That's actually much more difficult to do. For you to change your psychology and take yourself from an emotional, normal human being to some sort of sociopath or psychopathic level where you just like have no regard for your own psychology, that's much more difficult. Instead, what you should do, and this is kind of echoing what Danny has said and Juicy has said in the last market psychology space we had, you have to build a plan. You have to build discipline and a plan because that is the only thing that can truly counteract your psychology. If you go, yeah, I'm just not going to be a fearful or greedy person, well, that doesn't work because your brain is geared to think that way. And even once you create a discipline plan and a strategy that works for you, and by that I mean defining your risk, knowing what you trade, knowing what you're good at trading, taking the meat of the move, not overstaying your welcome, constantly reanalyzing your thesis on trades. All of these things are steps you can take to be better prepared. But at the end of the day, if you stray from your plan and stray from your discipline, you are doing so under the influence of market psychology, under the influence of human nature. And so if you want to be a better trader, or if you're finding that, for me, a lot of the newer traders that DM me or comment and approach me, they often have this question of like, hey, I know the technicals. I know the fundamentals. I know how to read a balance sheet. I know how to read an ER. I know how to scan an SEC filing. I know about VWAP. I know about RSI. I know about MACD. I know about SMAs. I know about EMAs. I know about supply and demand zones. But somehow I'm still not profitable. If you're one of those people who is educated but still cannot trade consistently profitably, it is, I would say, 99% or 98% likely that what's getting in the way is your psychology. It is that fear, that greed, that desire, that emotion, that can it keep going, or even it's ego sometimes, when you're right on a trade and you're up 100, 200, 300%, and you think, God, I was so fucking right. It might go to 1,000%. Like, these are the psychological barriers that cause most new traders to lose money. If you set a plan, you have targets on where you want a stock to go. Whether you're options trading, whether you're equities trading, whether you're small cap trading, mid cap trading, large cap trading, this applies to everything, every asset class this applies to. Have a defined risk going into the trade. Have a thesis on the trade. Thesis means why you think, a rationale for why the stock is either going to go up or go down. Guide your exit on when that thesis is, if it's the thesis is still true and intact, you can stay in the trade. The second that thesis gets disproven, you should be out of the trade. That is discipline. You may find that times that a trade hits your defined loss, you're out of the trade and it rebounds and goes higher. That's annoying as fuck. Trust me, it happens to me still too. But the reality is without doing that, without defining your risk, you are ruining the RR. You're ruining your own RR, which is detrimental to you in the long run because the more and more trades you place, the integrity of your risk reward and how well you're managing it matters more. Because just by virtue of simple chance and simple basic math, the more trades you take, the less likely it is that this free ball strategy of I'm just going to buy shit and then sell it whatever I want, or I'm going to buy shit and if it goes down 30%, I'm just going to wait for it to rebound. That kind of philosophy will destroy you in the long run. There's no way you'll be a consistent trader. I talk to about 15 different professional full-time traders every day or every week. And I don't know a single trader that's lasted in this business more than 5 years, maybe even less than that. But I don't know anyone, not a soul, that has lasted doing this profitably, keep in mind, for more than 5 years without being disciplined and without having a plan. So, we're going to talk about a lot of things about psychology today, but just understand psychology is really just the analysis of the emotions that you're going through as a human being in response to having your money on the line. And the only consistent way you can combat that is by building a trading plan, defining your risk, having a goal for your gain, understanding where the stock can move, why it will move, where it'll be rejected, where it'll find support. Understanding these things is the only way that you're going to be able to manage that risk, because otherwise you're just going to be a basket case of emotion like most humans are. And it doesn't mean that there's something wrong with you. Rather than trying to change your psychology, build a plan that will protect you from your psychology.
I like that a lot. I think it goes hand in hand with what Danny just said, because a lot of what you're getting at there is building healthy habits. And there's a lot of unhealthy habits that are really easy to develop when you're doing things like investing. And sometimes, to people that come into space, like I grew up a big doubter of a lot of different emotional and psychological help aspects. It was always like, I don't need that and stuff. But like sometimes you just need to hear someone say it. And it just needs to be driven into you that it does work. Like what Stockton was just getting with that at there, one of the things there was that when you go ahead and you do take, your gains from a trade, or let's say you even get stopped out of something and then it goes flying up afterwards, it's not checking back on it every 1 minute, right? And seeing, oh, I could have made this, or I could have made this, or checking back and seeing that it went down and going, oh, well, good thing, I got out. It's letting things go sometimes and building other such habits that are just a lot more healthy. Like I think Danny kind of gave like the prequel, right, where you're talking about pre-market, what you could do. Stock talking a little bit about what you can do during the day, and we're going to continue to dive into those. Let's keep the ball rolling, get everyone involved. Matt, would love to throw it to you. Same vein, market psychology. We're on the last space as well. Any thoughts off the bat, and then we'll go into some more specific topics after.
Absolutely. And I'll tell you, this is one of the hardest things for people to actually quantify. Developing habits is really hard to create something that you can do that's consistent, because you're always real with emotions. Traders, like, as far as the real trader skill set of everybody I've ever met who successfully does this or scalps or invests or trades for a living, the skill set they possess is rather agnostic to trading. It's more like something that translates to poker playing or anything else. It's really that ability to manage money, manage risk, quantify risk. So when I say quantify, I mean, add numerical values to risk. Is it good, in my favor, not in my favor? And those skill sets are universal to everything you can do in life. And people that get good at trading actually are getting good at managing money under pressure. It's like an astronaut would get good at fixing a space station in outer space. There's a point where you can simulate the experience, but it's a different mode when you finally actually get out there and you look down and there is nothing below you for millions of miles, right? But black, empty space. And so, like, some of the things that Danny was talking about, finding good habits. People always say when you get started, you should, paper trade or practice trade. And I'll tell you that it's the easiest hole to get in, to blow up your first account. Paper trading is a great way to get started. It teaches you the platform, how limit order works, how to navigate, where to get the news, how to pretend to trade. But the minute you put even a single dollar on the line, your brain completely changes, because your attachment to money is something that you're born with, and every person is different. How they are with that, whether you were born rich or poor, good job or no job, or you don't care about money, or you have money, or you're scared of it. Everyone's going to be different, and so nobody's going to learn the same. Trading is trial by fire. There's a huge difference between paper trading and then trading with $1 million account. But there's not much of a difference trading with a $10 account and $1 million account. The minute you add just $1 to your trade, your brain assigns value to it, and the value opens up a whole part of your brain that you probably have never used before, which starts attaching money and your desire to succeed and other things into your basic, mathematical decisions you'd be making as a trader. So, think of everything you do to get as close as you can as real trading. Paper trading for 6 months can give you some fake confidence that when you get to the live show, your first trade, you'll lose it all. And it just kind of goes downhill from there. And then you never take that relaxation. You never recover that emotional capital. And then you just completely spiral out of control as the days and years by. So, an idea, trading is trial by fire. You learn little by little. And, the idea Stock Talk was saying, changing your psychology, that's a great thing that's really hard to do, because psychology is like, it's kind of like sculpting, right? You shape it, but you can't change it. You can't snap your fingers and a statue appears. You shape it little by little. And just remember this, everybody, when I say this, it's easy to take away when you're sculpting, but it's hard to add to it. Okay. Trading psychology is just like that. It's easy to take away trust. It's easy to take away discipline. It's easy to take away technique. It's easy to let everything go to the sidelines and throw it all out. And once you do that, it is so hard to put it back, because you are so warped in the head that you can't really recover that easily. And it takes so long to crawl back to even that emotional state that you were in before. So you need to take changing or sculpting your psychology into a way of repeatable habits that you do. And everyone's kind of touched base on the same thing. You find a system that works, whether you have an algorithm or whether you have some kind of technical or fundamental analysis, but works for you. It's going to be something that'll match what you do and what you're comfortable with. And you practice it over and over again. And you keep a log of when it worked, when it didn't work, but you also keep a log of how you behaved, what was going on that day. Did you get in a fight with your significant other that morning and you deviated from your plan? Find the triggers that make you perform away from your strategy, and taking really good notes, a psychological journal, or even just kind of a little trade blog. I keep a trade blog in my Discord channel. Every single night I go through and talk about every trade I'm going to make. And then, in the stream that I do in the morning, I review the trades I did make, and I talk about when I messed up, how I messed up, or if it went well. But keeping track of your triggers and finding out, is there something that's constantly bogging your brain down? Are you over trading? Well, why are you over trading? What does over trading even mean? Some scalpers trade 100 times a day, and over trading will be 1,000 for them. For you, trading once a day, maybe over trading is 2. You have to know what you do and what you do well, and when you deviate from that, and just keep a really good log of things. And as you go in, like a little bit, I always go into the math side, but the law of large numbers, it's one of the things that says over repeated iterations, a constant task the results will revert to the mean as the number of iterations goes to infinity. So like if you were supposed to 1v1 LeBron, you would play, not best out of 10, you'd play best to 1. Hopefully you make that first basket first, and then you say, game over, I don't want to play anymore. Because if you keep playing, ultimately you're going to lose, right? So you can't just take your first big win like that and think, okay, I'm a great trader, and ride off of that success, because what you can keep doing to yourself is letting, the false sense of security also, shape your psychology in the wrong way, to where you're trusting the wrong things, or you're building your discipline or technique around the wrong things. And so you have to make sure that what you do, you've practiced with real money under fire over a long period of time, and you've eliminated all those triggers, kind of gets you messed up. Now, one of the triggers for me is overnight trading. As a futures scalper, trading overnight is very tempting, right? There's always moves, sometimes violent moves. And when you get into trades overnight, typically the S&P moves currently like 30-ish points in an overnight session. That's the range it stays in. But it also takes, 12 to 16 hours to fulfill that move, whereas in the daytime, it takes 1 to 2 hours. So you have to tell yourself not only risk and reward, but when we teach trading, we talk about there's a time factor as well. Risk and reward has a physical meaning, but there's also a decay, almost like a theta and an option, an emotional decay. If it takes 16 hours to make that trade, a lot can happen. A lot can happen to you, especially if you're at dinner and staring at your phone, or you have kids, or you have obligations. You're going to be in a different space. So it's risking the reward in the shortest amount of time possible. So that's one of my suggestions, for instance, as an example of ways you can physically change your routine, is find things that take too much time to do and make you stay up too late, or make you get up too early, or make you step out of your comfort zone when you have other things you should be doing. And keep a log of things that you do well, and make sure that you always find out, what your triggers are that drain you, and try to stay away from those.
I like the metaphors there with LeBron, and also the idea of the money concept, how we are intrinsically wired to, once it's kind of like what you were saying there with the dollar or the $10,000, whatever it is. It's kind of like when you enter into a raffle, right? Your chances, if you put in a single ticket into the raffle, go from 0 to infinity. And then after that, each ticket becomes a much smaller increase, right? It's an infinite increase in the first one. So it's kind of like the same thing with the money, right? Like the second you put that dollar in, it becomes real. And you have to change your entire mindset. But I love what everyone's saying with the paper trading. I paper traded for years before I really seriously invested. And I think that, went a long way, lets you study patterns in the market, lets you start over fresh, on a new day. I think there's paper trading accounts now that let you do even things like options, futures, all that type of stuff. So you can play around with whatever it is, crypto. They're really fleshed out. I always used Market Watch, but there's a bunch of different ones that people can use to try it out. So good stuff along those lines. Okay, let's get a few other speakers. Just give them an opportunity. So exclusive. Good to have you on. We streamed for like 3 hours yesterday. It was a lot of fun. Love to hear your thoughts on the topic.
Yeah, always fun. Thanks for having me, and I hope everyone's doing all right. It was a crazy day for sure in the realm of psychology, and there's a lot of similar things that we can all talk about, and I agree with everything that everyone has said so far, and you know so I'm a technical based trader, and all technicals really are tools to measure psychology in the market. So, that's really all you're measuring when you're looking at these technicals, of course, price action, et cetera. But I like to trade with these because of the psychology it's surrounded by. So, one of the main things that I would want to share with newer traders, in addition to, having a plan, avoiding bad habits, is a couple of things that people don't really do consistently, and that's actually take time to study and learn, as much as you can about the market and trading, and psychology before jumping into even paper trading, because, paper trading is a great tool to learn. And of course, it's not with real money, so it's also a way to kind of cripple yourself. In my opinion, this is just my opinion. I don't disagree with anybody, but in my opinion, when you're paper trading, you're not setting yourself up mentally for the real world in the market, which is very, very crucial to consistent success. And again, this is just my opinion. So, when I first started, I didn't paper trade. I went straight into trading, and I lost money. And I was one of those people who put most of their savings into the market. I lost 60% of my investment, and then when I was down to 40% of my investment, I said, okay, hold on. Let me take a step back and actually learn. So I spent the next 6, 7 months just reading, studying successful traders, what they're doing, what they've been doing. What can I do to improve what they might already be doing? And that in itself is just one of those things regarding psychology that really helped early on, versus just diving in up front without any sort of training or preparation. So that is definitely something I do agree with as far as creating good habits, learning how to manage risk, and learning how to trade before you jump into the market. Now, on the other side, what I like to kind of tell people that DM me when they're feeling down, um, if they make a bad trade, what did they do wrong? How could they change it? It's more than just the numbers, and I agree with what some of the other speakers were saying. It is about getting yourself in the right mindset before the market opens. Okay, so if you wake up and you're having a pretty good morning or a pretty bad morning, it could be either one. That doesn't mean you're necessarily going to cripple yourself going into trading, but you have to be able to take a step back and assess how you're feeling mentally in order to be successful at decision making, not necessarily trading, because all trading is clicking button and knowing when to time clicking that button. So if you're in the right mindset, it's it's a lot easier to make those trades in regards to psychology. Now, part of getting into that right mindset is having, the knowledge base to be able to know when to step back and say, okay, I'm feeling good about the market today. I'm feeling good about trading today. I'm feeling good about my relationships today. Whether I got good news or bad news, can I still effectively time my entries and exits and manage risk accordingly? So that's another way to, kind of build that psychological army you have on your back when you're going into trading. And you have to constantly remind yourself, because a lot of people forget to do this before the market opens. You have to remind yourself that you're trading your own money. When you kind of ignore it and you just look at it as, a hobby. And I've talked to a couple people about this. They're like, yeah, I just trade for a hobby. I buy things here and there, and I sell it when I see money, or I sell it when I lose a little bit of money, manage my risk, yada yada. That's all fine and dandy, but if you're going in with a mentality that this is just a hobby, it's never going to work, because when something's a hobby, you don't necessarily have a plan. You do it for fun, and you're not truly mentally managing your account the way that a broker for Charles Schwab's going to manage it, or someone else at a bigger firm. So having that knowledge base and reminding yourself that you're trading with real money is a huge advantage going into each day. And that's again why I'm a little bit against the paper trading in some respects, although it is a good tool. But to some respects, it doesn't train you mentally for the real world. Um, and to piggyback on the last thing I was saying about studying successful traders, that falls back to studying the psychology, and you have to be able to, I'm not saying copy successful traders, I'm saying learn from the characteristics of what they do inside the market and outside of the market. You'll notice that there's a really common trend with successful traders, more than just making money and posting stuff that a lot of people engage with. A lot of successful traders truly enjoy helping other people, because having knowledge and not being able to share it with anyone else is like mental torture. I literally go stir crazy when I can't help somebody else, and that in itself is just something that you can really use to improve, and just studying what other people are doing that are successful. Obviously, if someone's not successful, don't study bad habits, but um, you definitely want to learn from successful traders, study their positive characteristics, what they're doing, their strategies, what they're doing in the community, and what they recommend doing, and then absorb that information and practice the information. There's nothing worse than, talking to someone a week ago who I told, study XYZ, and then a week later they say, hey, I blew up this trade, and I say, okay, well, did you study the trade? Did you learn from it? What mistakes did you make? And the same mistake as XYZ, it's frustrating, and I know that that's frustrating to traders, especially beginners that make the same mistake over and over and over. So it's really important for your psychological state to study your mistakes just as much as you study your successful trades. And practicing is something that a lot of people forget to do. You can learn all you want, you can study all you want, you can trade all you want, but if you're not practicing outside of market hours, if you're not studying, whether you're a technical trader or you're a fundamental trader, if you're not studying the companies, if you're not consistently educating yourself to improve your method and hone your craft, you cannot improve, and that messes with your mind psychologically. So, to kind of summarize, it's just a matter of being disciplined, being flexible to take information in and learn and never stop learning. I was actually just messaging you today, Gav, about, I'm always learning. We're always adapting to the market. So, in a sense, we're all new to the game because there's always new things that can come out, and there's always new things that can kind of knock you down. And my last point, so I'm not too long-winded here, is so I minored in psychology in college, and we studied behavioral economics, and a lot of the same things that I talk to specifically my members about one-on-one is loss aversion. And that's essentially the psychology behind the prospect theory, which basically means that a small loss affects you 10 times more than a small win or even a big win. You can make a grand, a grand, a grand, and then you lose 500 bucks. Well, that 500 bucks that you lost really, really messes with your mind, and you start getting into your own head. And that is literally the definition of the loss aversion that people really, really don't think about before getting into trading. And you have to make sure that your mental framework is uh, ready to handle that. And if you are someone who you think that would really affect you adversely, then it's really important to kind of take a step back and say, okay, well, as long as I know that a small loss won't affect me more than I am celebrating those wins, then I know I'm good to go into the market and, start trading my own money, XYZ. So, and if I had to put it into an example, it would be, think of a gain versus a loss. Somebody that thinks of some 95% chance to win $1,000 versus 95% chance to lose $1,000. You're looking at the same prospect, the same, but you have, adverse risk and seeking risk. So it's just another way to kind of fall back on perception and how you're perceiving, the fear and the psychology of, making money and losing money and how you're looking at it. Because hope of a larger return kills a trade just as much as fear of a large loss. And I tell people this every single day, that are like, I only made 30% and then the trade went to 500%. Who cares? You made 30%, that's profit. Celebrate the win, even if it's 30%, and step away. There's there's no there's no rule or law saying that you have to make another trade. You have to keep going into more trades. And, I think that kind of overwhelming feeling is what really tackles a lot of newer traders. So I feel like I've been talking for a really long time, so I'm going to be quiet.
No, all good stuff, man. A lot to decipher there. I think there's a few things that came out, which is the first that I'm taking away is learning how to celebrate the little wins, instead of letting the little losses be what tear you apart. And
Yeah,
even if you come in,
yeah. Just to piggyback on that, Wolf, like the reason that traders have a hard time taking base hits is because it doesn't feel meaningful to them. And a lot of that is the pollution that we see, on Twitter and other social media, where people are sharing like $1 million trades, and people with smaller accounts are thinking, like even when I make 100% on a trade, I'm only making $1,000. If you think that way, you're never going to be able to build your account because percentages are what matters. And if you can't bring yourself psychologically to take profits, like I know traders who will watch, trades go up 50, 60%, and they're like, oh, I didn't hit 100%, so I didn't take profits. And then it comes all the way back down. So you have to gear yourself. Like, again, discipline is the only way to do this. Because if you're just purely relying on your own intuition of when to sell or when to buy, then you're really randomizing your exits and entries. That's what you're doing. So ask yourself, like, you know, regardless of what your thesis is on a stock, ask yourself every day, like, is this an appropriate entry? Is this an appropriate exit? Or is my psychology encouraging me to make this move? Am I psychologically just becoming inclined to slap the ask or, sell here because I feel like it's topped out. Like when I hear this, I hear people say all the time on Twitter, this exact phrase, I feel like it can go higher. What does that even mean? Do you know it can go higher? Are the technicals telling you it's going to trade higher? Is the market cap low enough to where you feel like there's room in the valuation? What is the reason? I feel it can go higher is not a rationale. So, if you're depending on your intuition to trade, you might hit a few home runs. And I mean people who are depending purely on their intuition. I'm not saying ignore your intuition, but I'm saying if you're depending purely on your intuition to guide your trade, guide your entries, guide your exits, it's randomized. You're gambling. You're just buying and selling at random points. So, this goes back to the education aspect of, learning how to trade technically, learning how to trade fundamentally, incorporating them both, in my opinion. I'm always going to be of the school of thought that technical based traders should learn fundamentals and fundamental based traders should learn technicals. Like I am immovable on that point. And I have many good friends who are purely technical traders. And I have many good friends who are purely fundamental traders. I tell each of them and either of them all the time, hey, I tell the fundamental guys, hey, learn how to read a chart, properly read a chart. Not look at a line chart and make guesses, but learn how to properly read a chart. Learn how to read supply and demand zones. Learn how to use VWAP and SMAs and EMAs and RSI and MACD. And then I tell the the technical guys, I tell them, look, do you know how to read a balance sheet? Do you know how to read an earnings report? Do you know how to scan an SEC filing? Most of them don't. Not, and no offense to the technical traders, but most of them don't. Most of them don't have the proficiency there. And what ends up happening is they both overstep the line. The fundamental traders overstep the line by not realizing that the technical capacity of the move has been exhausted. The fundamental traders overstep the line by not realize, the technical traders overstep the line by not realizing that the market cap of the company has become excessive, or that, versus its peers, this company no longer has a reason to trade there. Like whatever it may be, gear, giving yourself the tools by educating yourself is going to make your decision-making process and the data side of your trading significantly better. From there, it is purely psychology. So if you learn both of those and then you're still having trouble, that's a red flag right there that you're having a psychological issue with trading. And I know someone brought this up earlier. I think Exclusive brought it up, and Day Traders Paradise might have brought it up as well. But about paper trading, like and this is not financial advice, just to clarify, but I hear new traders come to me all the time, and they're like, "Hey, I've been paper trading successfully for 3-4 months, and I made whatever hundreds of percent on my paper trading account in a few months, and now I want to go into real trading with real money, and I find that I'm losing. Why do you think that is? It's because all of a sudden you've gone from trading with no real risk, with none of your money on the line, to now, whether you're losing $500 or $5,000, I mean, it depends on the person's size of the account, either can be significant, but, going through that process to me is important because like putting the risk on the table is what allows you to gauge, some people are more calm and collected. Some people are more rash and like spontaneous. I don't know, it's going to vary from person to person. I don't know each of you individually, but if you are a new trader that's having trouble with execution, and that by that I mean your entries and your exits, if you're having trouble executing your trades, really revisit your psychology and ask yourself, am I trading a plan, or am I trading my emotions? And if you're trading your emotions, the only way around it is a plan. And if you're doing paper trading, you don't have that pinch on your skin that you get. Even if you're playing with, I always tell people, play with sports betting amounts when you're first starting. The money that you put on sports bets that you're comfortable losing outright, right? You lose a sports bet, you lose it all. Put that level of allocation, right? So if you're a person who has, I don't know, a 100,000 net worth, maybe put a few $100 on it, just to test it out. But even losing that few $100 is going to be a pinch on the skin that you'll be able to feel it. Like no one likes losing money. My account has grown significantly over the last 10 years, but I hated losing $500 10 years ago, and I still hate losing $500. right? Like that doesn't, to me, it doesn't change. But by paper trading and teaching yourself that way, I think you remove the psychology. And, I don't think it's a great way to learn personally. And I'm not saying don't paper trade, or if you are paper trading and it's working for you and educating you, I'm not telling you to stop. I'm just saying in most people's cases, I find that it doesn't work because they aren't able to feel that pinch. They're not able to feel that risk of having money on the table. And that's really what guides the psychology. You wouldn't be an emotional trader if you didn't have real money on the table, right? Like people who are paper trading are holding bags that are down 60%. They're letting runners that are up 2,000% keep running. You wouldn't do that with your real money, or I would hope that you wouldn't. And that's the real difference. So I just wanted to, piggyback on the paper trading thing. I'm not a fan of it. I don't think it educates people on how to be able to manage their psychology.
It's like going to the casino with Monopoly money.
Yeah, that's a great
It
analogy.
really is.
Yeah, exactly.
And just to
I
clarify,
was
if
like
I can
sitting there
add
trying to
something.
think. I was like, man, what analogy can work with this?
Yeah, I hear you guys, and I definitely respect what you're saying with the paper trading. I think it works for some more than others. I would also say when I did it, there was like some prize on the line. I was doing it through like clubs and stuff, so I guess it wasn't the same as having my own money, but there was something. But yeah, if you're just doing it with like nothing on the line, like not even bragging rights or anything, you'll probably not be taking it too seriously. But yeah, I definitely hear and respect both sides. All right, Juicy, I want to get you involved in this because you haven't spoken yet.
What's going on, everybody? I want to just go and give you the opposite of what people are saying about paper trading. Here it comes. Give me a second. I'm about to throw the article in the top of this right here. Before I get on to my piece of psychology, I think you should paper trade, right? I'm going to give you the opposite point of view. Look at this article I just put up. It doesn't give the full story. I was a younger trader when it dropped. This dude from his French firm, he couldn't keep his profits. Like they gave him real money to trade with at a prop firm. He kept blowing accounts up. They switched him on paper. He was a rock star. So what they ended up doing was telling him that he was on a real account. I mean, he was on a paper account, but they gave him real money and he made 10 million. So I like to approach it is, are you taking this thing seriously? Right? You have to focus so hard on your plan on paper that every loss needs to be treated like a real loss. And where people disconnect from the whole paper trading thing is that loss isn't a real loss, so you don't really feel the pain. It's not until you lose money that you sit here and say, I need to not do that anymore. Because if you lose money on paper, in theory, you're just going to keep just doing the same thing over and over again. And it's not till you feel that pain that you make that adjustment that creates that growth in trading. So I meet with traders all the time, right? And then I make some new traders sit on paper. And what ends up happening is these guys are profitable. And I don't clear them to go live because they're profitable. I go through the trades and I literally say, trade A doesn't look like trade B, and trade B doesn't look like trade C. You might have made 10 million, but in essence, you shot yourself in the foot because you're not consistently following a trading plan. How can you expect to have consistent results on paper or in real life if you're not consistently following a trading plan? That's just my take on it. For me, I make my new traders come in. I make them simulate trades. Why? Just to learn the market. There's other things that you don't really know. Like trading has other increments besides buying and selling. There's spreads, there's stock personality. Shop doesn't trade like Apple. Apple doesn't trade like Fisker, right? You have to discover all that stuff somehow before you put your real money online. And some of my best traders, if you guys follow me, you guys know who Mark Salone is. He's the guy that took a small amount into, I don't want to say numbers, into a crazy huge amount. Then we have Khalif, who did the same thing. These guys traded on paper for 8 months before they started trading with the real thing, and they did it. And when they got to the real thing, they did it very, very well because they were so serious and so focused on it. So for me, I think you should paper trade. I think you should get that exposure, and I think you should practice that repetition. But the trade-off is you have to take it seriously, right? You can't be like Stock Talk Weekly said, holding $1 million bag. That's not going to do anything for you. You have to beat yourself up if you take a loss on paper and treat it like a real loss. Now, my take on market psychology is, where is your focus, right? What are you focused on? Are you focused on making money, or are you focused on becoming a trader, right? The biggest thing that new traders mess up on is they walk into the game with a profit goal. You're day one saying that I have 25K and I want to make 100K by the end of this year. You just shot yourself in the foot, because what's going to happen is you're going to attach so much emotional dispatch to money. It's not, I've been trading for 10 years, okay? And I've been profitable for 8 years. I want to say I've only been trading for 8 years because it took me a very long time to learn that I need to follow a plan. And the only way I was able to do that was by shifting my focus from making money to executing trades. That's the biggest thing that new traders, and especially like Stock Talk Weekly says, you go on Twitter, Reddit, you got guys that are doing random things, making millions over here, and you got your account and you made $200 today, right? So what happens is you're looking at this guy that made $1 million and you have this profitable trading plan, and you say, you know what? I'm not going to trade my profitable plan. I'm going to trade what this guy's doing. And so again, how can you expect to have consistent results if you can't consistently follow a trading plan? That's thing one. Thing two, what is your process like? Right? Do you know your process? Are you in love with your process? Because let me tell you something. When you guys are trading, you are trading against the best in the world. You're trading against me. You're trading against Stock Talk Weekly. You're trading against exclusive. And if you're going to come trade with us or against us, you better be ready to play, because if you're not ready, if you're not looking at your trading plan, if you're attacking this market with just randomness, we're going to take your money. We're 100% going to take your money. So therefore, you have to realize you need a process. This process has to be repeatable. All right. So going back to paper trading in the real world, in my opinion, the only difference is the feels, right? When I was younger, when I blew an account first time, I went on simulation. I saw the feels were way different. I was like, whoa, this is easier. But the process of implementing was the same, right? So I wanted to make, my back was against the wall, so I needed to make this work. So that's why I became a great trader. Like my back was, I was in some situations, so I had to make this work. So when I was taking these losses, I went back to paper and I was taking the same losses here. That's how I discovered repetition. And I noticed I was able to quadruple accounts on paper. But when I went back to the third time of coming off that blown account after trading on paper, I did significantly better because my focus was realigned to consistency. So the next thing I want to say is consistency is everything in trading, man. You have to be able to find some type of method that you can repeat. Like I was saying before, does trade A look like trade B? And if trade B looks like trade A, you are a trader because you're consistently finding or like something you can repeat, right? So if you're not trading something that you can repeat, I wouldn't even consider you a trader. I consider you a button masher, right? And because you're mashing buttons and you're following all these random plays, eventually the market's going to take your money, or somebody in the market's going to take your money. You need something that says, I can consistently make money on it, and I can cut the losses small when I'm wrong. But that's it on my take up. But I totally agree with pretty much everything else as everybody else has said.
Really good stuff there, Juicy. And I like the hot takes on both sides. And I think you made some great points there about like when you need it, like that's when sometimes you sober up and roll into it. Like for me right now, I don't make my living off of investing, but I hope to at some point. And I hope to that be a big point. But so maybe I'm kind of like in a transitional period right now where I'm not going all in because I have that safety blanket, but that's okay. And I also want to just talk to the audience real quick and state that if you're not a day trader or a swing trader, that's okay too. You can use these psychological ideologies for long-term investing as well. If it's holding something long-term, because at the same time, even if you plan to hold something for years, if it runs up too much in a certain period or it drops too low or something, you still need this ability to be able to cut or trim or buy more, whatever it is. And like Stock Talk Weekly said, mixing this with technicals, fundamentals, this is like that third area that I see. Now, the only person who hasn't talked yet, I'll go to you, Matt, in just a second, is stock market news. Appreciate you being patient, bro. I was going to try to get to you a little sooner, but this is how the cookie is crumbling. So what's going on by you?
No, no worries, dude. This definitely, I feel like with the speakers we have and the real people are getting value out of this. I think it's a lot of more traders and day traders and swing traders in that area, although this is a really important thing for everyone. I think step back. One thing I would say is like, it's a lot easier to be level-headed when you're not putting yourself in precarious and really risky situations. So, it's okay to it's okay to take big bets, but I think that one thing that everyone up here would have is everyone goes into stuff with a plan, knowing their risk, knowing their reward. There's no massive surprises, and if there is a massive surprise, it's to the upside and not to the downside. It's capped. So I would say just a big step of market psychology and avoiding these the worst situations is taking that step back and not allowing yourself to be exposed to it. There's a lot of different ways that I see people do this, whether it's going all in on one trade or keeping doing that, or like blindly following others, or I don't know. a lot of people might like even like bet on stock earnings using options or on margin or stupid stuff like that. There's so many inventive ways to blow up your account, and you're going to panic a lot there. It's just human instinct that you're going to panic when you're in precarious situations. So now a great way to avoid your darkest days is to limit the risk. One other thing I want to touch on quickly, I don't know who it was, someone talked about really how people have $1 million days and they don't understand that if you're betting with 10 million, if you're betting with $100 million and making $1 million, that's 1%. This stock market and everything here, return is a game measured in percentages, not dollar amounts. I've heard too many of my friends and too many people on here, a lot of people will say like, I don't have enough money to start investing. I have X small amount of money. I'm not going to make enough. But the big thing with it is when you start with smaller amounts, when you do that, when you focus on the percentage gain, you're going to, once you get to the point with more dollars, you're going to be an expert. You're going to be so many more years into this where you've had that base. A big thing that people were saying with trading on paper accounts, I think the similar thing is whether it's trading with paper accounts or trading with $10 or $5 or $20 or whatever. Starting at that small amount is really where you're going to build your base for the long term, and really you're going to build the experience, the knowledge, and where honestly you're lucky if you blow up your account at $100 because you just learned a lesson there that you can use when you have real money to invest. So I would definitely throw that out there as well. And then one more thing I'll touch on this is really a big thing with FOMO. And I'm seeing it a lot recently. Stocks are running all the time, and people are buying tops and they don't know. One thing that I ask myself a lot, and there's certain people that I think this will be helpful for, is ask myself what scares me more, losing money or missing out on the opportunity to make money. There are some people that if your answer to that question is you're more afraid of losing money, then you should never be buying those type of runner stocks. You should never be putting yourself in that situation. If your answer is the other one, you're missing on the opportunity to make money, then go and look at the technicals, do your work on that side. And I think Juicy is a big person who talks about this, and I'm sure a lot of other people would agree, that if a trade goes wrong, but you're using your system to a T, exactly what works for you going forward, and it goes wrong, this is a game of percentages. It's going to happen. Like, no one shoots 100%. As long as you stuck to your plan before and limited your risk, that's okay. Taking a loss is okay. Taking controlled losses is a part of the game and an important part of it. But yeah, I'll give up on the mic there.
Good point there. I think that's a great point, in fact, of there's two steps to this, right? The first one is what you can control. And the second, well, I guess the first step is what you do, and the second step is how you react. And in a lot of situations in life, you can only control how you react to something, right? People have probably seen the interview trick where they say like, you're not getting the job, and they just want to see how you're reacting or things like that, or they ask you questions. And what Evan just pointed out is so true. You can choose what situations you put yourself into a lot of times, and then in the ones that you do, once you're already in them, you just have to choose how you're going to react to it. And so whether that's reacting to being massively up or down, there are tips and tricks to both sides. So Matt, let's go to you, and then let's go to Juicy. And since everybody's had, first off, we're an hour in. If you haven't already, I'm assuming that many of you have, make sure that you're checking out these speakers as they're talking. Again, every single person on this panel, besides myself and Evan, is a full-time trader. That's how they make their livings. They're really good at it. They've been profitable for like almost a decade, most of them. If you're trying to break into this area and you're like, I wonder who's going to help me learn how to invest and trade, Matt, Juicy, Exclusive, Stock Talk Weekly, Stock Market News, Danny, like these are the accounts that you need to follow. They're going to introduce stuff to your timeline. They throw out ideas in place. They host spaces. So make sure that you are following all of them consistently. Now, with that being said, to my speakers, since everybody has had a 10-minute chunk, let's try to keep it moving forward to maybe like 2 to 3 minutes so we can rapid fire through several topics. Matt, you want to go first?
Yeah, I actually I wanted to just go to your topics. I just wanted to clarify a lot of people in here probably paper trading now and probably just got their hearts broken as a bunch of these seasoned traders seem to be dogging paper trading. I just wanted to clarify, and Juicy kind of inspired me to say this. It's really not that like we've been trading for so long that we're like so anti, we don't remember our roots, we came from there. The idea is that you have to take it seriously. So don't don't take what we're saying abruptly go back and say, man, I'm wasting my time paper trading. Yeah, the whole part is for you to actually discover what it actually means. And when Juicy says treat a paper trade like a real trade, you're training yourself emotionally, and whether you do that paper trading or any other way, training yourself with those emotions is the right way to go. So don't just think like, oh, these guys here are saying paper trading sucks, I'm totally wasting my time. You can get something out of it, you just have to define it correctly. And I just want to kind of clarify, and Juicy inspired me to say that. So learn what you're actually doing and where it limits itself. Don't just immediately throw it out tomorrow. Again, that's all.
Yep, Juicy.
Yeah, just to before we
Oh,
go to
sorry.
Juicy, just real quick, just one point on that. Yeah, I agree with that. I don't disagree with what Juicy said earlier about he has examples of people who have learned how to trade from paper trading and have been very successful, and I don't doubt that at all. I'm sure that there are. For me, the reason I'm broadly against it, and not in every case, is because that idea of taking it seriously, it's easy to say that. It's harder, in my experience and from the people I've talked to, it's harder to actually get them to do that, right? Like, it's harder to get people to treat a fake loss of artificial money as a loss of real money. And I think that's the caveat, is like there's an extra step involved there, right? Like, the extra step involved there is having people have to convert their psychology to convince themselves, hey, I have to treat this like real money to learn. If you're capable of doing that, yeah, then in that case, paper trading can be an effective way to learn how to build a strategy. It is just my opinion that most people will not be capable of doing that, in the same way that most people are not capable of changing their psychology. So instead of doing that, they have to build a plan to counteract it, right? If we could all flip a switch in our brains, just talk to ourselves for 2 days straight and convince ourselves, hey, I'm not going to be emotional. I mean, that'd be great. No one would need a plan then. But the reason you need plans and discipline is to get to counteract your psychology. So from my perspective, you accept that you're a human. You accept that you have emotions. You accept that you're going to be emotional about your decisions. But you counteract that by setting up a plan and being disciplined to stick to the plan regardless of those emotions. So again, I don't disagree with what Juicy said or what Matt just said. But I think it's just case by case. I think for certain people, paper trading can work well if you have the discipline to convince yourself, hey, I have to treat this like real money. I just don't feel most people are capable of that. Most people I've seen who paper trade are just taking massive risks and not managing their not defining their risk profile, hanging on to winners endlessly, things like that they wouldn't do with real money. So that was kind of where my philosophy came from. I didn't mean to shoot it down like in an absolute fashion. I think there are certain disciplined human beings who can do it and learn from it. But in most cases, from what I've seen, most people can't do that.
And it's like, how do you simulate emotions? To kind of finalize that topic is like, I kind of want to make an algorithm that whenever you're bag holding a 30% loss in a paper trade, that a fist just comes out of your monitor, punches you in the stomach. Because in reality, you need to simulate that feeling. And that's so hard to do. And how do you simulate the feeling of extraordinary highs and extraordinary lows? It's almost impossible to do. So anyways.
Man, do you know the emotional state of people, right? So here's my thing with paper trading. I've coached over 400 people, okay? So the results don't lie. I've sat with people, and the majority of people that come into any program with real money, they almost always have some slight form of drawdown. This is what happens all the time, right? And this is why I say women traders are better, because they come in, they follow the plan. So these dudes come in here, they have a slight drawdown, they're mad. I'm doing everything you're telling me, blah, 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 blah. They go on paper, and I'll give you an example. I have, I'm not going to say no names, but I have a student who started with 10K, he went up to 12K and went back down to 5K, and he's like, what am I doing wrong? He goes on paper, he practices everything for 7 months, comes out 10K, all the way back up to 22K in a month. It wasn't the market, it was him following the plan. You can't expect me to give you money if you don't have the discipline to go ahead and cut a fake trade when it's wrong. So how do you expect you to develop that discipline with the real thing when you have more emotions attached to it? It's impossible. So you have to paper trade so that you can grow as a trader, so you can develop discipline. That's the purpose of paper trading, to develop the discipline that's needed, because I can give you a winning method. As a matter of fact, off-topic example. Why does Lewis Hamilton win almost every race? Everybody's driving the same car, right? So Lewis Hamilton has the ability to say, you know what, I don't need to go 200 miles around this corner. I can slow down and let all three of these dudes come around me, and I can pass them around the corner and hit them on straightaway. You can't learn that in the real market uh, by throwing away money, because most people are going to quit. You start losing money, they walk away. This is a scam. This is fake. Blah blah blah. But if you do it on paper and you learn this on paper, you're going to be able to take it to another level when you come to the real game. Now, somebody says you can't learn how to run your personal finances. I'm not saying paper trading is going to make you a millionaire, but it's going to put that foundation of discipline there. And as you get into the real world, you're going to develop more discipline to take it to another level. But if you're trying to get into the market without discipline, without foundation, you're just going to crumble your account. That was my biggest downfall, because I made money off the rip with real money, and then I lost it all. And then I started paper trading, then I killed it. So I highly recommend you do it, but you have to take it seriously.
Good stuff. Good stuff all around. Now, one of the things that I wanted to get to last time was avoiding this echo chamber or groupthink that can happen in a lot of situations. You know, you come on Twitter and everybody's pushing one thing, and sometimes that doesn't work out very often. Or you come on Twitter and you see somebody, you know, tweet out something bullish, and you don't really check others, and you're just like, wow, this person said this is bullish. I'm just going to take their play and rely on them. So I want to talk about how we can properly approach these things, because there's certainly value in community and discussion, but there's also treachery inside of it. So let's kind of dive into that. Stock Talk Weekly, do you want to kind of lead off with that, and then we can kind of go around the speakers?
Yeah, sure. So, that's the topic you're talking about is kind of actually the reason I started my FinTwit account. I've been trading since I was 18, so I'm 20, a little over 28 now, and it's a little over 10 years. And what I've learned in that time was, I came onto Twitter and FinTwit on a personal account, so not this account. This account I started in August of last year, but I've been on Twitter, FinTwit, on a personal account for about 5 years now. So I've seen, some of these pump and dump groups come and go, and I've seen all of these hype tickers and meme tickers come across the feed for years now. And there's just so much garbage, so much lack of quality information on FinTwit. And there's a lot of great stuff too, like all the speakers up here put out great stuff. But, a lot of the large pages on FinTwit just put out garbage, right? They just put out, like, they'll just tweet a theme or a hot term and put rocket emojis and GIFs and memes, and that's their due diligence and that's their work. And, seeing that and seeing how many people were rallying around that kind of stuff is what made me make my Twitter. And so I try to be very data focused. I don't post a lot of charts, but I do discuss technical levels all the time. I'll discuss, key resistances and supports on charts and supply and demand zones and things like that. And I discuss a lot of fundamentals as well. But, I really try to bring detail and quality of information. And that kind of goes back to what I said about data. Part of this psychology thing, and this kind of ties into what you're saying, Gab, but also, ties in with what you're saying about the groupthink. Uncertainty is part of the reason when your emotions really kick in, right? Like, I'm trying to think of an analogy. So an analogy I'll use in, like, a situation is, like, let's say you were dating a girl and you knew for sure that she cheated on you. Let's say you had a video. Wouldn't it be a lot easier to break up with her than if you just thought she was cheating on you, or if you had an inclination or an intuition that she was cheating on you? It's the same thing. It's because data allows human beings to overlook their psychology. So I'll say that again. Data, the more data you have, allows human beings to overlook and overcome their psychological barriers. The same way you may think, oh, God, did she cheat on me? Did she not? I don't really know. I don't have evidence. Boom, if you have a video, you're out. Well, I'd hope you'd be out of that relationship in a hurry. And that's the thing is it's the same thing with trading. I always encourage people, we talked about fundamental and technical data earlier. If you want to get out of the group think of FinTwit and get out of these hype trends and bullshit tickers, you have to have your own thesis. You have to have your own conviction. And that comes with data. The more fundamental and technical data you have in your favor, the more likely your trade will be successful. And also, the more likely you'll be convicted in that trade. And if you're convicted in a trade, then you're convicted in your trade plan. And you're not going to let things like intraday volatility or price manipulation or indiscriminate selling in the broader market, all of these things that might interrupt your thesis, you're not going to let that happen on a convicted position. So conviction in a position, which again comes from the aggregate amount of data you have to support your thesis for that position, that conviction alone will help you overcome a lot of the psychological barriers that are in the market, including groupthink, including chasing hype tickers, including FOMO, including fear and greed, all of these things, because you as a trader know, I took this position for X, Y, and Z reasons. I'm convicted because I have X, Y, and Z amounts of data. And I have a plan set for when I'm going to enter and exit the trade based on my thesis. If you have that for every position, it's going to become significantly easier for you to overcome the psychology and the fear and the greed and the groupthink. To get to that point, you need to educate yourself. So step one is also always education. Learn TA, learn FA. Step two is build a plan. Step three is stick to that plan regardless of the chatter that's around you. I always tell people there's no harm in trading these hype and momentum names. The harm is when you trade these hype and momentum names without a plan. We can talk about some shitty tickers that have been shilled lately, like CEI, for example. A ton of people lost money on that. If they had traded a plan up on the 1,000% move and they were scalp trading the momentum, they could have made a lot of money. But that all comes from a lack of plan. It comes from this holding and hoping mentality. Like, I don't typically play or tweet about those meme, everybody on FinTwitch tweeting about it. I try to come up with my own plays. People who go through my feed, my plays are usually pretty unique. I would say an exception to that is Lucid, because everybody and their mother's on Lucid. But other than Lucid, my plays tend to be pretty unique. I pick tickers that not a lot of people are on. And I do that because I like to come up with my own trades because I'm more convicted in them. When I see it and borrow an idea from someone, which is kind of speaking to what you said, Gav, when you see and borrow ideas from people, you're automatically going to have a lower level of conviction because it's not your idea. I can sit up here, when I have buddies who I'm telling, like in real life friends who I'm telling, hey, get on this stock, I can tell them everything I want. I can tell them the fundamental information. I can explain to them the setup of the chart, and they may get the position, but are they truly going to be convicted in the position? You're never going to be convicted in something that you got third-party information from. If you yourself go and look at the financials, look at the balance sheet, look at the ER, you look at the chart, you look at the SMAs, the EMAs, the MACD, the RSI, the VWAP, you look at these things yourself, make your own conclusion, you're much more likely to be convicted in the trade. And if you're convicted in the trade, you're much more likely to be able to execute a disciplined plan. If you're not convicted in the positions that you take yourself, psychology is going to be the last of your problems. You're not going to be able to manage the trade because you don't know where it's going and you don't know why it's going there. So, that's what I kind of think about the groupthink phenomenon. And I think it's really easy to counteract if you just take the time to collect data. The more data you have on every position you take, the higher, the more likelihood that your trade will go in your favor. Period. End of story. Like, the more data you have, whether that's fundamental data, technical data, whatever it is, the more data that's in your favor, the better chances you have of having a successful trade.
Couldn't agree more. Also, something really cool that's been going on right now is Danny Nuss has been actually taking quotes and tweeting them out from this space. So if you go into Danny's page, the Papa Wall Street up here with the orange background, you'll be able to see a bunch of recap with quotes from everybody that he's put out there. And Danny, I wanted to bring you back into the convo and then get exclusive back in too, and come to you with this idea of how we can a little bit avoid some of the group think and make decisions for yourself and be confident in those decisions.
Ooh, this is such a good, such a good topic. I really wanted to touch on this, just listening to everybody talk. So I think it's really simple, and maybe I've been guilty of this earlier on when I started my room. But there's probably people in the audience, and there's definitely people on FinTwit that are copycats. They just want to follow a trade. They want to join a room that puts out calls. They get into the trade, they get out of the trade because the entry was called, the exit was called, and they make money and they lose money. The problem with that is by following someone else's trades, you can't really own the win, and you certainly can't own the loss. And so that's terrible for market psychology. It really is. And so if anybody in the audience, if you're in a room or if you're just following people on Twitter and you're taking that trade, you know, when you get that win and you make that money, how do you feel? Do you feel like you really are owning that win? Because if you do, I can guarantee when you get that loss, you're blaming the person you took the trade from. And that's not right. It's not right to you. It's not right to the other person that you're taking their trade, because every trader trades differently. And so the one thing that I actually have changed, I don't call out sells. You know, in my room, we have a really close, tight knit group of traders. And I stopped calling out sells because I don't want people to follow me. I'm happy to say I like Tesla at this level. I'm going to take my trade here, but you're never going to see me say I'm getting out, because I want people to own their own trades. If you don't start owning your own trades, you're never going to be a successful trader. You're always going to have to rely on someone else. You know, and I'm all about teaching a man and teaching a woman to fish. I'm all about that. But you know, it's very clear to see who's in it just to make a couple of quick bucks, and not necessarily in it to learn how to trade. I'm more interested in working with people who are really in this. They're passionate about it, and you could always tell right off the bat, you know, people are really hungry. They're asking questions. They're following up. They do their homework. They're charting the levels, and they're taking the trades, and they're posting their wins and they're posting their losses, because you have to own up to both. So yeah, I mean, I think it's really important for everybody in the audience to really understand that it's okay to follow someone else's idea, so long as you're taking that idea, you're charting it up yourself. You say, you know what, I like this idea, I agree with it, I like the entry, but here's my profit target, and here's my stop loss. If you're not doing that, I mean, you're just spinning your wheels. You're forever going to be tied to some trader who's going to be throwing out ideas, who's going to be right sometimes and wrong other times, and you're just going to continue to spin your wheels. And listen, that's okay. If you want to continue to do that, that is okay. I'm not saying that's a bad thing, but you can't start pointing fingers and posting on Twitter. You know, oh, you know, you called, you know, that was a terrible entry, and oh, that was FOMO, and you chased this and you chased that, because you really only have to point your finger at yourself.
Great points there. That's really interesting. Not being able to take the loss and fully kind of like comprehend it and learn from it. I think that's a great point. Looking through a couple DMs real quick. Yeah, Juicy, go ahead and post your lesson on trading psychology at the top, please. Feel free to do that. Also, want to get exclusive back into this. So, Juicy, going to you and then over to exclusive.
Now, when we start talking about, you know, the group, the herd following the flock, if the man who walks in the same direction gets the same result. And what is the direction here? Like 90% of traders fail. So if you're doing what 90% of traders are doing, what's going to be the same result, right? You're going to end up failing. I run a room. I call out everything, you know, entries, sales, and everything. But I do a great job of trying to teach my traders how to trade. I was just on audio. We have what we call the midday mentorship session in the middle of the day, and we're on audio, on live stream, just talking about, you know, the market slows down midday. We're just talking about trading, and you know, and I like doing these type of things. So I like to get inside people's head and understand how they think. I should have been a psychologist, right? But the point of the matter is, I've gotten my team to a place, and the guys who do very well, to understand what I trade, how I trade. And oftentimes now, when I call a trade out, I got the same 9 to 40 people that are at the same button I'm pushing, right? They're getting in the same trade exactly the same time I am. Now, if you're in a room and you're just trying to follow a big guy taking trades, in theory, it sounds like you're going to win, but honestly, you're going to lose, because it's something what I call trade alert lag, right? Options contracts at the drop of a dime can go, especially Tesla, can go 50 cents, the dollar, even $2 in a tick. And sometimes they don't even stop. They just go from 50 cents to $2. I've seen it happen. It happened today with Shop. And if you don't understand why that influencer or guy is pushing that button, you're going to get in a way different field price than him. So what's going to happen is you might win on some trades, but over the long term, you're going to lose on more trades. So therefore, you're going to follow this guy and go nowhere. So you need to be able to develop a trading plan. Any trader that has a complete trading plan doesn't experience FOMO, right? Because if the stock's running, like Amazon today, you don't have a plan to get in. You're just going to look at the stock and say, it's whatever. It's not a part of my plan. And the reason why these guys here, Stock Talk Weekly, exclusive, Danny, these guys are so successful in what they do is because I can guarantee you their consistency is through the roof. They take the same type of process every day and every night. So therefore, you can't experience that same success until you learn your path, and you do that by trial and error. All right, so that's it for me. And by the way, I'm going to post this, and I think this is really will help you guys. I did a mindset lesson. I'm gonna post it at the top here. Watch it, man. We break down FOMO, everything for free. It's just to help you guys out. We're gonna post it up top. It's on Twitter. You don't gotta download anything. All you gotta do is hit play, and you'll be all good.
Love it, man. Evan, you have a quick comment?
Yeah, no, I always love these spaces, always love the speakers. Just want to reiterate, just definitely check all of them out, give them a follow. And then, one thing that we've been working on that is one of the most valuable things that I think we've created is the Google Calendar. I was just hoping maybe we can get like 10, 15 seconds on that, or 20 seconds.
Yeah, absolutely. Just made my way through about 100 DMs, so I'm ready to load back up. We now have over 1,000 people on the Google Calendar, which is crazy to see. So what me and Evan have been working on, for anyone that's listening, we know you have lives. We know you don't all just sit on spaces all day like us, degenerates. Instead, you want to plan out and have the opportunity to come to spaces, but also live your life. So what we've created is a free public Google Calendar. Anybody can be added to it. The only thing you need to do is go ahead and DM either one of us your email, make sure your email's in there, and just ask to be added to the calendar. That is it. It is that simple. We'll add you to it. You'll get an email. You'll able to add it on, and then it's just a toggle on and off. And what that allow you to do is every Sunday or Saturday, whenever you want to plan out your week, you'll go on. Basically, by Sunday at 4 p.m., I have all the spaces for the week uploaded, and you'll be able to see, oh, here's a NFT space, here is a technical analysis space, here's a fundamental analysis and live option trading, whatever it is. You'll know when all those are going to happen. You'll be able to plan around them, come and get this free knowledge, and nothing better. So that is all you have to do is just DM either one of us with your email. We'll add you to it. Over 1,000 people on it. People from Twitter are on this Google Calendar. So make sure that you're doing that. We'll continue to buff that up. And if you want to be on either of our newsletters, feel free to ask that too. Now, the other question that I'm getting is a couple of people have noted that this space is being recorded with the Twitter Spaces recording. This is my first time ever testing with the Twitter Spaces recording feature. I have no idea how it's going to come out. I have no idea if it lets me download it or share it. So still having Angie from Black Box Stocks, huge thank you to her at Lala Lovely Trade. She is doing God's work out here recording this space. That way I'll be able to upload this to the YouTube, Spotify. You can see those in the link in my bio. You can see like 100 recordings of different spaces. I've been uploading them now for over 6 months. Somebody just DM me, what's your YouTube? It is in the link in my bio. It's in the link tree. There's all that stuff. You can check out the Wolf app. So that is it for all that info. Love to see the DMs come in already, like 12 DMs. Feel free to keep DMing. Just make sure your email's in there and you can send it to either one of us and we will get you on all those things. With that being said, let's get back to the conversation. Exclusive wanted to bring you back into it real quick for your thoughts on the groupthink stuff, and then we'll go to Matt.
Yeah, I mean, similar to what Stock Talk said, I've noticed over the past, I think now more than ever, I think the past 2 to 3 years, especially since COVID, there's been a huge uptick in it, but it's been around for a couple of years. I think we barely post, these pump and dump tickers that are, being mentioned by a lot of gurus or whatever it's called, and it's I think we post, one or two of them before the hype kind of kicks in. I think PROG was the most recent one, and that was just a technical viewpoint, and it just so happened to be one that was targeted. So, there's a lot of similar setups that you can find using technicals, and there's also, there's ways to avoid what's called I can't think of the specific term for it. It's like herding instinct or crowd behavior or something like that, whatever it is. But there's ways to avoid it, and one of the main ways is to counter trade the like market psychology sentiment. So when a lot of institutions and a lot of bigger traders use these tools to gauge the fear greed index and see how greedy people are becoming, how fearful they are of losing money. And when you get closer to these higher levels of greed, a lot of people don't really know that this exists, and there's a way to kind of get out before everyone else does. And that's at the euphoria stage. And if you've studied the stages of market psychology, you know that euphoria is really where you don't truly want to be in a trade, that's usually when you catch the falling knife. But these euphoric moments are really when a lot of pump and dump stocks start to gain serious traction. And you'll notice that 99 out of 100 times it's after the stocks are probably up 2 to 5% already, and even more so on the week. So, when you see something being talked about all over the place, get a gauge where it's at daily, get a gauge at where it's at weekly, check the technicals, check the fundamentals, and really just kind of get a sense of where you think the stock is at. Don't just buy in because someone's saying, it's going to go to 20 tomorrow. It's at 15 right now, man. It's going to move. There's 400,000 people going into it with you, so it's going to move. So that's when you're letting fear and greed take over because you're fearful of missing out on the herd, and you're greedy because you want to make more money than what you have in your pocket right now. And that's irrational exuberance, and you really don't want to be a victim to that, because I think 99, that 10% of the market of traders in the market that succeed versus the 90% that fail, I guarantee you the 10% that succeed aren't doing that. I know I don't involve myself in it. I've been victim to it a couple times, not because I directly followed, but because I was in one of the names when it did pump and dump. So it kind of sucks, but it happens. There's no one's perfect. But yeah, technicals and fundamentals are a really good way to kind of get a gauge of where the mass psychology and these moves are going and how to avoid falling victim to it. So um, yeah, I mean and there's a couple of books on crowd psychology and how you can kind of avoid being a victim of it. But really, at the end of the day, is just make your own trades. You can follow anybody. It's already been said, you can follow people, but if you're not learning how to make your own, I think every single point that has been made tonight all falls back on self-education. The paper trading, while I don't really agree with, using it, in my opinion, it's just more of a creating a habit of overconfidence. You know, Someone who makes 100 successful trades on a paper trade account is going to go into the market with a heightened sense of confidence, and that opens up their account to unwarranted risk. So, in that regard, that's the only reason why I don't agree with it. But every other reason, sure, why not? It's a good way to familiarize with a broker. It's a good way to get used to entries and exits and studying stocks and how they move, et cetera, et cetera. But yeah, no, I think I got off topic, but you
Y-
get my point.
Yeah. You're all good. Okay, so I'm about to go to Matt, but then I'm gonna come teach the speakers afterwards because I really love taking away tangible things from this. I want this audience, like we've had almost 600 people in here basically the whole time, and I think people are taking a lot away from this from a mentality and mindset standpoint, and that's very important. I want people to also walk away with something tangible that they can do. So after Matt, I'm gonna run through my speakers and just like in 30 seconds to a minute, would love to hear from each one. What is one thing that you can do each day or each week, whatever it is, outside of literally placing the trade that can contribute to the mentality, and to having a better and healthier mentality for market psychology. So take that as you will. I can give some examples, but I don't want to steal anybody's answers. So Matt, what were you going to say? I saw your hand up.
There's a couple of things I wanted to touch base on. I think if everybody can go up to the post that I made a little bit ago, that's an actual snippet. So we have a trading algorithm, and we have a mentoring service and coaching and all that. But that's a snippet from the rules of my Discord. And if you read what it says, it almost touches exactly on base of what everybody's been talking about. It says, the standard stuff about the disclaimers of not being licensed and such, but the real juice on that one is if you're discovered to be following or copying trades here, you will be banned without a refund. Please be here to learn how to trade and be independent. This is your team, not your crutch. They will lift you up, but they will not lean on them to get by. I am notorious for sending out a message to somebody who says, hey, I bought that trade because you bought that trade, and telling them to pack their bags and go. And they say, well, I didn't read the rules. And I said, I just did you a favor because you didn't read the rules. And trading is all about discipline and following rules. And if you didn't read those rules and you're trying to sneak your way to the top, you're not ever going to get there. And I probably saved you a whole lot of time and effort by now. And usually that gets people in shape, and then we give them a second chance. But really, the idea is that, you can't, gimmick your way to the top. Paying your dues is what's strong. So on that note, that was kind of one of the things I wanted to say. groupthink, I'm one of the biggest advocates, and I don't want to break anybody's heart here, but this whole penny stock nonsense that's taken over Twitter and social media. There are 14-year-olds on TikTok who now give trading advice. COVID's invented a guru every single minute of whatever the case may be. And I just can tell you guys two things. Number one, believe absolutely nothing that you see anywhere on social media. If there's no account number sitting next to whatever claim is there, the person doesn't want to lie and commit fraud on Twitter. So just be very careful. Believe $1 million pump and dumps, these things. Assume everything is a paper result unless there's some verifiable thing that goes next to it. The only verifiable thing is an account number. Everything else can be doctored or whatever. But if you post a fake account number and fake results, that's actually against the law and you get sued for that. So nobody would do that. So that's your one gauge that it is real. A lot of these penny stock groupthink things out there, most of them are pyramids. There's a way you can exploit algorithms out there that instant burst of effect creates that move. And, make up a reason you like the stock, tell a million people, then boom, the stock moves, right? And that whole thing benefits money funnels to the top. And I just want to make sure that everyone understands that's not really trading as much as it is just buying a lottery ticket and hoping you're one of the first in line. So be very careful when you're learning to trade to not get sunk into one of those as the first things you do. Most people do because they start with low capital, and penny stocks are very cheap. Sometimes you get these offshore brokers that you can skirt the pattern day trade rule, and then you're trying to cut all these corners, and then you're going to gimmick your way to the top because some guy post a picture of his Rolex that he walked in the store, put it on, took a photo of, and walked out. Like, don't ever let that shape you at all. You are being lied to most of the time, and there are no trading skills coming with that. It's just a follow me mentality. It's a do what I say, follow my lead, copy what I do, and you will be successful too. Does that sound like anything else to you guys? Sound like I don't know, pick your favorite multi-level marketing scheme out there. It's a very similar, it's a downline type process. You're only as good as the hundreds of people who are below you, who are losing to you. So be very careful on what people do call trading, and don't try to shape your trader psychology around things that aren't necessarily giving you any benefit. If your reason to buy something was because someone else bought it, how much money do you think there is to go around that mentality makes everyone rich at the same time? There's a limited amount of money, and it's going to funnel to the most influential persons. So just be very careful with this group speak. You have to learn the business. You have to pay your dues. You have to go out there and get whooped around, blow up an account every year for a couple of years. I mean, you really have to go in there and learn this business. You really are on your own. And I tell people all the time that watch me, especially on the stream, I say, I love you guys, but I really don't care if you win or lose. I'm in it for me. I'm trading for myself. And technically, I'm maybe teaching you, but also competing against everyone else in the world. If you lost a trade, I may have been the one that took your money. I think Juicy said that earlier about, that kind of mentality is that, if you go in there weak, we will take your money. The people that learn the business have learned when you're hurting, write down what made you hurt. Like literally, write it down. This sucks. When I lost 20%, that's when I started throwing out my Cheerios on the ground. That's something you need to know. And you're going to remember the next time you get to that point to expect that feeling. And when you can start to expect those feelings that come, you can start to kind of like turn that volume knob down of those painful feelings when you're trading, because you have to try to keep as clear of a head as possible. You're never going to turn that fear down to a zero. It's never going to go away. You can just turn that volume down so low that you can't hear it anymore, but it's always going to be there. So you have to just make sure you, my one tip for every single day is when something hurts you, write it down and remember how it hurts you and what you did. And then did you deviate from your plan or not? If you didn't, you'll start to hone in on that one thing that really gets you. How much of a loss until you can't keep your cool anymore.
Definitely, yeah. Writing it down can be a great thing, and that's one of the things I figured we would touch on with people. A lot of people say, there's two things here: was writing down your trades, right? Having a ledger. Sorry if I'm stealing anybody's. Definitely having that ledger is important. And then also, like with sticky notes, this was something that worked for me. And I remember, again, I recounted this in the last space when I was working at Goldman. Everybody had fucking sticky notes all over their computers with just like tidbits, like don't forget this, remember this, like quote from Mark Cuban, quote from this person. It was just like all there, and sometimes you just have it stuck in your face. And that's why I think it's important to come and listen to these things and just continue to have repetition. You pick up on it, you pick up on the quotes, and then when you're in that moment and it comes time, you look at the sticky note, you remember back to the space, and you go, okay, I'm not going to make that mistake again. All right, so I want to get through the rest of these relatively quick. So actually, you know what? Instead, to give that time, let's do this. Let's combine them. Let's do some wrap up. But inside of the wrap up, because we're almost at 2 hours, inside the wrap up, let's do, make sure that part of it is you're talking about that one thing that you have built into a habit or that you do regularly, which you think could be a tangible thing that people could take away. Because this way, I think we come away with the psychological mental side, and we also come up with something that we can do physically, which is, I think, where the beauty of life meets. And then I'll kind of give mine at the end if it hasn't been taken. Danny, would you like to go first?
Sure. All right. So what I'm going to talk about basically has nothing to do with trading, because this is the reality. There are two types of people in this world. There are people who have discipline, and there are people who don't. And the people that are in the middle, they really don't have discipline, because there is no, it's kind of like Yoda, do or do not. There is no try. You either have discipline or you don't. Okay, so here's the undisciplined person. They wake up whenever they want. They get to work late. They eat whatever they want. They go to bed, they wake up. Every day it's different. There's no routine. There's no habits built in. They just do whatever they want. And then there's the flip side. You have the person that goes to bed at the same time, the person that wakes up at the same time. Maybe they have a very similar routine in the morning. Maybe they eat the same thing. They drink the same thing. You can go down the list, but I think you get the point. There's people who have discipline, and there's people who do not have discipline. If you do not have discipline in your life, meaning you know, you stay away from sugars, you stay away from carbs, you stay away from foods that don't feed your mind and feed your body, then you have no discipline. If you can't, if you give into desires that you have no control over, then what makes you think that you're going to be able to take that undisciplined mentality into trading? And I'll tell you right now, you're not going to be a successful trader. So for me, you have to own yourself. You have to own what you do, how you do it, when you do it, to whom you do it. That's it. Fix that. That's half the battle of fixing how you trade. And if you want to go down that path, if you are the undisciplined person, then look up Jocko Willink, look up David Goggins, read their books. They're ex-Navy SEALs. I'm actually ex-Navy myself. But I came from a military family, and I was in the military myself, and that's where I learned my discipline at a very, very young age. So, if you don't have discipline, you need to find a way to learn it and to own it and to live it. And it's nothing about trading. This is about life. If you want to be successful in your job, in your relationship, in your business that you just started, you need discipline. I mean, it's really that simple. So if you have no discipline, you have no business trading. I'm sorry. I hate to be, that point blank, but you really don't have any business trading, period. Exclamation point, exclamation point. To wrap it up, I mean, listen, I think we've all said what we've said. Everybody's got their own opinion. Everybody's got their own method. Everybody's got their own system. And none are wrong and none are right because it's only right to the individual. The most important thing you can do as an individual, and it's whether it's trading or in life, find a mentor, listen to them, stick with them, treat it like a business, and you will succeed in time. You're not going to learn it overnight. And the last thing I'll say, when you want to be a doctor, when you want to be a lawyer, you go to school for 8 years, right? Doctors go to school for 8 years and then they do, residency for 2 more years. So it's almost 10 years before they're even touching a patient, right? We're not expected to walk into the stock market trading against not even experienced, forget about experienced traders. You're trading against computers, you're trading against algorithms. Trust me, you're not faster, you're not smarter than a computer. I'm sorry. So you have to understand that, spend 6 months, spend a year, learn how to chart. I'm on the fence with paper trading. You can go either way. It doesn't matter to me. But learn how to read charts first. Before you even take a trade, learn how to read the charts. Then you can start thinking about trading. And I lied before. The last thing I'm going to say really is going back to discipline. If you don't have discipline in your money management, forget about trading. If you don't have discipline, meaning you have a balanced checkbook, all the money that's coming in of what you're making, all the money that's going out, how much is in excess, how to save. If you don't know how to do that, you have no business trading. If you want to do this for a living, you need to have at least 2 years of money banked, that you would need to live on to even start. Because if you say quit your job today and go to start trading tomorrow full time, and you only have 6 months money in the bank, guess what? You're going to trade emotionally because you need that money to survive. So have discipline in your life, have discipline in your money management, and then you'll be able to potentially have discipline in your trading. Gab, thank you so much again for putting this together. I think outside of the technical analysis stuff, I really love this, and I think that this is so much more important than the technical analyst part of trading. So I hope everybody in the audience appreciates all these speakers up here. Make sure you're giving everybody a follow. And Gav, definitely looking forward to the next one. Thank you, everybody, all the fellow speakers, and thank you, everybody in the audience.
100%, Danny, and you made some great points there. And I will join on with you that David Goggins that is some crazy stuff. When you read the book, I watch a lot of his videos. He really shows about discipline, pushing yourself to the limit, a whole bunch of different other categories. So definitely can vouch for that. And then, of course, Danny, this was a pleasure to bring this back. I'm considering, if you're in the audience right now, maybe you can do a little poll for me with a little 100 emote. So the Twitter Spaces main account would like to do a collaboration space with me. And they've basically sent me a info, whatever, like a form to fill out, but I can only pick one space to do it with. And I'm considering doing it with a market psychology space, perhaps in maybe 2 weeks from now, to get their account in here, fully promoted out there. The audience, can you throw up a 100 emote if you think this is the space that I should do that with versus, fundamental or technical analysis? something along those lines. I'll see if we get some reaction, but I'll of course talk to my speakers as well, make sure that that's something they're okay with. But yeah, looks like there's some interest. Oh, thank you for sending me the 100 directly, Sharon.
Yeah,
Yeah,
I kind of agree, Gav. And I think these are good. I'll talk to you in more detail about it, but I think maybe we could gear it on a topic where we can touch on a little bit, more things, right?
of course.
But because I do feel that while I do think market psychology is super important, and I enjoy these conversations, I do feel like besides for me and Juicy disagreeing on the paper trading thing, outside of that, I think most of us have been on the same page about most of this stuff. I think it is. I don't want to say repetitive, but a summary of basically what everybody said is have discipline, have a plan. Don't let your emotions get in the way, and the way to do that is by being disciplined and having a plan. So, I think we could talk on this topic obviously for hours. We have today, and we did before, but I think just a suggestion is maybe gear it around something where we can do a little bit of that, ticker talk and maybe FA or TA talk, and maybe even throw some market psychology in there. If it's going to be your first spaces with them,
It's not
I
my
think
purpose.
kind of keeping the topics, keeping the flexibility for the topics, I think would be a good idea as well.
Yeah, how about we chat offline? Um,
Yeah, we will.
yeah, we can plan something out. And we'll get some other people involved with that too. But yeah, we'll put together something to do with them. I just wanna do something with them soon. And I have done one with them before that was a financial literacy space, which went over pretty well. We had Jonah and some others on that. Okay, thank you, Danny. All right, stock market news. I want to go to you. I know you're not a day trader, but I'm sure there's things that you appreciate building habits in life. So throwing it over to you for any final comments.
No, yeah, definitely. I agree with a lot of what's been said here. I do think it's a very, very important topic. I think the couple things that I just want to reiterate on what I said earlier was just, a great way to stop yourself from getting in these positions is staying disciplined, as Stock Talk Weekly said there.
Is the space. I know Evan mentioned it. Me and Evan are trying to host a regular space with, some of the CNBC anchors. So tomorrow we have Guy Adami and Dan Nathan. They're going to be on there for at least an hour. We're going to have, hopefully a really healthy discussion. And I know, a lot of retail traders have, maybe a little bit of vested bias against CNBC, and because they feel like they're on the hedge fund team and the retail team. But CNBC is really the mainstream news and for stocks organization in the world, and they get a lot of eyes. And rather than fight the narrative, I think it's better for us to try to build a new narrative and try to give more retail ideas exposure on these kind of platforms. So that's really what me and Evan are trying to do here. Trying to get on the same wavelength as some of these mainstream media anchors who I believe do have a lot of experience, and a lot of time get painted in the wrong light. So really encourage you guys to tune in on that tomorrow. That's going to be at 10 a.m. Central, 11 a.m. Eastern, above in the nest. So if you're in the audience and you want to scroll all the way up to the top, above me and Wolf, you will see a pinned tweet from me describing when the space is. I have Guy and Dan tagged in there. Would really appreciate, and I don't ever ask for this, really appreciate you guys to drop it a like, drop it a retweet. We want them to feel loved. We want them to feel welcome by the retail community. We don't want this to kind of be like a hostile thing. We want it to be a very friendly conversation, fireside chat style. So go show your support for those CNBC anchors, and like that tweet, retweet it. And if you want to be reminded of the space tomorrow morning, hit that set reminder button, and it will give you a notification on Twitter when we are ready to go. So I would just appreciate that personally if everybody in the audience can go do that on the pinned tweet above. But outside of that quick little self promo there, we did, I want to touch on just the fact that I think for the most part, everyone up here is kind of on the same page. And most of the spaces that we do, there is a variance in opinion, especially when it comes to specific tickers or even trading strategies. There's a broad variance of opinion there with a lot of quality traders. And that's understandable because different people have different styles, different people trade different asset classes for different reasons. And, that's A-okay. I don't ever expect everybody who's trading to have the same style. It probably wouldn't work if that was the case. But the market's a beautiful thing because you have independent decision makers who have their own strategies, their own psychology, their own goals. And they all act that way. And that's why the market is such a random, volatile, beautiful thing that I've, enjoyed being a part of for a decade now. So if you're a new trader, really pay attention to the difference of opinion, follow a diverse range of people. Don't be married to a single school of thought. And remember, the more data you have to support a decision that you're making, a trade or an execution or an exit or an entry or whatever it is, the more data you have, the less likely you are to be a victim of your psychology. And it's really that simple. So if you do yourself the favor of educating yourself, learning about FA and TA. I'm never going to be the guy up here that's going to tell you to be one or the other. Learn about FA, learn about TA, learn about them both, and learn about them broadly enough that you understand what's going on. And then build a trading strategy. And maybe your trading strategy will be more technically focused. Or maybe if that's not where you're savvy at, it'll be more fundamentally focused. But at least you'll have a strategy. And at least you'll have rules to follow. And those rules and that strategy and your discipline, which is your ability to stick to the rules that you make yourself. That is really the definition of discipline. Humans aren't born disciplined or just snap their fingers and become disciplined. Discipline is your ability to follow the rules that you make for yourself. And so if you build a strategy, set out rules, set out, risk allocation for every single trade you take, you will be a more successful trader overnight. I don't want to say overnight. You will be a more successful trader once you've completed that process. But take that strategy and then apply it. And today I know I was against paper trading, a few others were, and Juicy was in favor of it. And that's fine. Paper trade if that works for you. Or trade with small amounts of, like I call it, sports betting money if that works for you. But the first step is education. The second step is building a plan. The third step is applying and refining that plan. So whatever trading strategy you come up with, you apply it and you refine it because it's not going to work perfectly instantly. You got to refine it to different parameters, what's working for you, what indicators are working for you, what fundamental information is driving, the price action more. You decide on these things over time. And then once you've refined your strategy, then if you can consistently and in a disciplined fashion stick to that refined strategy, that is the formula for success. So appreciate all you guys up here. Drop everybody up here a follow. Be sure to tune in our spaces tomorrow. Again, that's at 10 a.m. Central, 11 a.m. Eastern, pinned at the top. But yeah, that's about all I have to say, Gav. Back to you.
100%. I have never even seen Stock Talk Weekly ask anybody retweet a post. I do it all the time. So I will ask you, please go retweet his post. It is the last one up there. Just retweeted it. I'm going to try to hop on that. Like I said, I'll be in a car at 11:15. So, at least to bring my audience in. But really looking forward to that and make sure that you're checking that out. And of course, following Stock Talk Weekly, who literally every time he opens up his mouth, it's just freaking gold. So with that being said, I really enjoyed this as well. I know several people came in right towards the end and requested. Unfortunately, not bringing people up right now because I need to go put some food in my body. It's been too long and too much Twitter in the last 24 hours, some might say. With that being said, thank you so much to both my speakers as well as the listeners. To the listeners, this is a rare type space. There's not a lot that go on like this where they talk about psychology, where they dig into the mentality and the things that you can do in real life to improve that. So props to you for taking the time out of your day to come to this. It really is a little bit of self-health. You're trying to put in that extra step. Like this is one of those steps of things that you can do weekly, in my opinion, is go to Spaces. Go to Twitter Spaces and listen to them. I think that's a great way, along with writing down your notes and build habits. Go to Spaces. Make that a habit. In my opinion, it's going to do you a lot. With that being said, my name is Gav Blacksburg. It's been a pleasure having you all on here tonight. Wishing you all health, wealth, success to all you do. Have a great rest of your Thursday night. If you're watching Thursday Night Football, please root against Patriots. Thank you, everybody. Take care.